Okay, welcome to this edition of the Palomar Perspective. I'm Steve Collins, a partner with the Palomar Group in Augusta, Georgia, investment sales firm. And today's guest is Aaron Zucker with Zucker Investment Group. Aaron started his career in real estate in 2012 with DLC and in leasing, and in 2013 he moved over to Phillips Edison as a leasing representative. And then in 2016, he moved to PEB Enterprises as their senior VP of leasing. And recently, in the end of 2018, he went out on his own and founded Zucker Investment Group. So, Aaron, why don't you tell us a little bit about how quarantine's going for you right now, and how everything's going at Zig.
Things are great. All things considered, most importantly, everybody's happy as can be and healthy, which is first and foremost. And obviously, hope everybody's got as speedy recovery as possible. And work-wise, got a good little thing going right now. I see there being a lot of opportunity for small entrepreneurial groups like us that are able to go out and find good sites. I say go out, I mean go to the computer every day and find good sites.
No one's going out right now.
Yeah, exactly. There's some markets to be driven. If there's long as you spend a couple hours in the house, I'm not afraid to go see it. But fortunate to be seeing some really good deal velocity as a result of all this stuff. And obviously hate to see some of these sellers in financially strapped situations, whether they be over leveraged or just not real estate operators. But we sort of look at it like we're providing a solution to the problem, giving them an equity cash out, and moving toward executing our platform, which is creating value in small retail deals across the country. So I'm busier than I've ever been, believe it or not. I've been talking a big game these last couple of years, and how I've been excited for a recession to hit in some way, shape, or form, because I felt like it would be a really great opportunity for us. And now it's a little bit nerve-wracking in a sense, because I feel like that we're kind of ripe to grow, but at the same time, this is what I signed up for entrepreneurship for. And so, as you guys can totally relate to starting your own firm a few years back, you just kind of dive in first and learn how to breathe under the water later.
Yeah, no, exactly. I feel like this time it's while obviously we're not, no one's excited that we're going through it. I feel like we've kind of had to get back to our roots, and most of the time we're so just focused on the deals that we're working on, and just kind of got your head down going through those and working through those, that you don't have time to get creative and think of what else you need to do, what else you can be doing. So I feel like we've had a lot of time to do that over the past few weeks, and to a degree it's been kind of fun. I feel like you're getting back to kind of how it was when we started.
Right. I think you guys are really primed to navigate this thing really well, because you guys don't sell a specific type of retail real estate. And frankly, you sell oftentimes some product that isn't just straightforward and isn't just get an email blast out there and have somebody bring you an offer. And you guys are, doing some of those deals, as I see some of your basic down the fairway single tenant triple net stuff, but I also see some complicated, tertiary markets, shopping center deals that you guys bring out. And so you guys' fundamentals of knowing that there's two sides to the table, it's not just getting the listing, you got to find the buyer too, I think is going to really set you guys up for success to this thing. And
yeah,
probably,
well, thank you.
not that it's all about competition, but you guys are probably going to come out a little bit better than some of your competitors.
Well, thank you. We hope so. I mean, we love those straight down the middle, those strate down the middle ones.
Yeah.
Where you just send out an email blast and wait for the offers to come in. But no, you're right. We do have a lot of tricky ones that you got to match the right buyer up with it. So
right.
We've had a lot of luck doing that, but hopefully we'll be able to continue that as we get out of this. But take us a few minutes and just kind of tell me about what kind of your career progression has been, and what led you to make the decision to go out on your own.
Sure. So I knew pretty instantaneously when I got into the business at the end of 12, when I started with DLC, that I wanted to be an owner of retail real estate. And that even stemmed before I technically got into the business. because my background was a little bit unique. I actually owned a bar in college, it's exactly what it sounded like, what it sounds like. It was a good time. It was in Tuscaloosa, which is the home of the University of Alabama, or what we like to call the school champions.
Yeah.
And that was right in the thick of it. So we owned it from 2010 to 2015. So the reason why I got motivated to get into retail commercial real estate is one day I was walking our rent check down the street because our landlord had a little office right down the street. And he wasn't there. It was like a weekday at like early afternoon. And I come back and I'm like, hey, I slipped the rent check under the door. Like, why wasn't he there? It seems weird to me that he wasn't working. And somebody was like, that guy's on the golf course. He owns like 400 properties. He collects rent from schmucks like us all the time. And I was like, whoa, hang on.
I need to do that.
That's when the business slapped me in the face the first time. And then the second time, a good friend of mine, Stuart Miller, who was formerly with Core Realty. Now he's with his family business, Ray Miller Properties. I had an internship outside of the business one summer, and he was kind enough to let me crash in his other bedroom in his condo. That's like a high-rise building in the middle of Buckhead. And he's like, he's 5 years older than me or 6 years older than me. He's like 26 or 27. And I'm like, what do you do? Because this place is awesome. Like, you clearly live well. And he's like, I lease shopping centers. You should try it. I'm like, okay. So between the bar and that's sort of was the motivation to get into the business. And then once I learned how DLC structured their deals from a very basic elementary level, because I didn't know the difference between CAM and base rent at that point.
Yeah.
I had a pretty strong inclination behind the entrepreneurial spirit that I'd already started with the bar to get into the ownership side at some point in my career. So I then had an opportunity to move to Charlotte with Phillips Edison, which is obviously how we got familiar with each other. And they were kind enough to give me an opportunity to really cut my teeth in this business. And I say kind enough to give an opportunity to smile on my face. I was basically leasing grocery anchored shopping centers with no grocery store on the wrong side of town. But I wouldn't give that up for anything, because I feel just sort of like you guys are, and it's no secret, you guys have sold some of those properties in the past that I actually used to lease. I think that whether if you're selling that asset or if you're leasing it and operating it, like I was fortunate to play a smart part in, there's no better way to learn this business, because if you don't know how to go hunt and how to operate properties that aren't necessarily sexy, then I think you're stealing somewhat limited. So I'm eternally grateful for what DLC offered me from the education standpoint, from what Phillips Edison allowed me to do from an experiential role. I had some great people that were mentoring me there, like the Joel Strausses and the Ron Myers and the Mike Conways of the world, and I had some good success there, and was able to procure some box deals and some of those centers that the grocer or whatever had left. And I through a headhunter found the PEB opportunity, and that was essentially my breakthrough job. I kind of had understood the basic leasing principles at Phillips Edison, but when PEB took a flyer on me to run their leasing platform in 2016, that allowed me to become a big fish in a small pond. And I was in the room when they were deciding whether or not to buy a property, refinance it, hire someone. And I can't speak highly enough about not only the growth and the deal exposure that I had there, but more important than anything, the education that I had. And the Wiener family was incredible to work for. And, that ultimately led to me going out on my own, just knowing that they are a family office. They wanted to keep the ownership within the family. I totally respect that. They were fine with before I got there. They'll be fine without me. And so that's when I kind of knew that I had enough information in my head to be dangerous, coupled with a good Rolodex with people like yourself. And December of 18, I said, let's go. Relocated back to Charlotte, where I'm originally from, and said, let's give this thing a shot.
Nice, good. I remember the first time I heard your name was a center that actually still had a grocer in it when with Phillips Edison, and then it was Hampton. We were working with them on Hampton Village, and
that's a great site. That's a good center. I make it seem like I'm that property. That's a good center.
Yeah, that was a good one. It did have I forgot. I think it was they had a small gym user and Staples, I believe, next door to the Publix there.
Office Depot. Yep.
Yeah, off Depot, yeah. And I remember we were on the site visit with David Wik and Joel Strauss, and we were talking with Joel about it, and he was like, "No, I got this guy. He's gonna do great." Aaron, talking about you, Aaron Zucker. He's like, no, I'm gonna send him down here. He's gonna get this thing leased up in no time. I have no idea why I remember that. I mean, that was like 6 years ago, but
I'm humbled.
for some reason, I remember Joel seeing it. It probably was right not long after you started. That I was probably like 2000.
Yeah, it couldn't have been long. We were fortunate to get some deals done there. I mean, that's a good site. To this day, I've always been bullish on that real estate.
Yeah. No, it is pretty good. But well, let me ask you. I know you own several assets right now. So how have with everything that's been going on, how have rent collections been this month, and how are you handling the tenants?
Yeah, look, on the downside of it, I'm a one-man show, right? I've got a great intern, but he's back home with his family, rightfully so. And so I'm obviously running point on all those negotiations and stuff with tenants. That's the downside. The upside is I don't own that many properties, so it's not overwhelming to manage. And I'm fortunate that most of the tenants are paying rent. I've only got a couple that aren't, and of those couple that aren't paying any rent right now, we actually own the properties free and clear. So that helps. So that said, we're still navigating those times. They're restaurant tenants. I'm confident that we'll be able to work out some amicable situation for both the landlord and the tenant, because if anybody understands how critical that partnership is and relationship is, it's certainly you and I, just based on operating properties throughout our careers. And I'm confident that those guys will come out on the other side of it, and they know that the good news is nobody's looking for any free handouts. The tenants, and what I'm seeing and what I'm hearing out there with other people's portfolios, is that people are willing and able to collaborate and try to make sense of it. So as long as everybody continues to communicate and share what their hot buttons are and aren't, then I think in general it's not going to be hopefully as bad as what people are saying and doing. I just think the CMBS guys who are when those landlords don't have any other way to fund the mortgage each month, that's a little bit of a dicey situation. We're fortunate to be in a really flexible position right now to be able to get creative and make things happen with the tenant.
That's great. I do feel like groups like yourself who are not public companies, who are privately held and don't have a lot of layers that they have to go through, and don't have a lot of the CMBS debt obligations, are able to be a little bit more limber. And
correct. Yeah, the only private groups, especially the smaller they get, the more this would apply to, should be fine, with the exception of them just being over leveraged.
Yeah. Right.
If you're incredibly over leveraged, you're going to feel it, and if your tenant genuinely can't pay you, I think there's going to be some distress situations, and guys like you will be selling them, and guys like me will hopefully be buying them.
That's right.
As much as I cringe a little bit saying it, but that's the truth of the matter.
Yeah. I don't know. I don't feel like. I remember back in 2008. Where it was just. There's just distress everywhere. Or 2009, 2010, and I don't feel like we're going to have another situation like that, because I don't know. What do you think? I don't feel like the banks are just chomping at the bit to take.
I think two things. I think the banks were more conservative on the deals that they've lended on in the last couple of years, which helped. And as a follow up to that, I think the banks realized, and it's in so recent of their memory. It's in such recent memory for them that they don't want to make those same mistakes again and have to get in the asset management business. Right. I don't think they want to do that in general. Yeah. So I agree with you. I don't think it's going to be quite the bloodbath, and this is more of a one-time catastrophic event, to whereas the housing crisis recession was something that was leading up and leading up and leading up. Yeah. So the longer it led up to, the longer it probably drowned out for 2, 3, 4 years, as you were in the midst of, and I came in on the end of the last one. I think the downfall would be quicker from this one, but the pickup will hopefully be substantially quicker than the 3-4 years it took from the last one.
Yeah. Hopefully that's the case. I do. I don't know. I feel like Georgia's opening up to a degree today, and Tennessee and a couple other states. And I was wondering, for the past few weeks, I've been wondering, like, everybody's been, stuck in their houses for a month. Is it just going to be this mad rush to go do stuff once they open the doors on the economy again? And I don't feel like that's happened. I feel like people are still cautious. So, I do think the recovery is going to be quick, but I don't know if it's going to be as quick as I thought it was going to be, because I do feel like people are still going to be cautious for however long.
Right.
So
I think a lot of that's going to be, it's going to be really interesting, because some markets and socioeconomic demographics are going to jump and be ready to get the heck out of their house. And some people are going to say, I value my life and my health too much. I'm good. I've got plenty of space here. I'm not crammed in 400 square foot apartment like I would be if I was in New York City. Sure, I'll go to the grocery store once a week, but there's just no reason for me to go sit down at a restaurant or go to a movie or go to the gym when I've got the space and the ability to do a modified version of all three of those things at home.
Yeah, I agree. Well, as we as we emerge from this, what tenants and what does the tenant profile look that emerges successfully from this and are able to thrive in a post-COVID world, and who do you think doesn't make it out? Okay.
Sure. So I think that, let me answer this latter part of your question first. I'm not sure if there's a specific category that ultimately dies because of this. I will tell you that this will definitely expedite the process of certain retailers and categories that didn't have anything dynamic to offer the customer profile. Generically speaking, on our business, I think there's two types of offerings that a retailer / restaurant service group, whatever you want to call it, should have. They should either be super high end and do things the right way, like the Nordstroms and the Apples of the world, where you're getting or the Lululemons, where you're paying a lot, but fantastic service, culture, message that they're presenting. Or you've got extremely great value-based guys who, like the Planet Fitnesses of the world. I'm extremely bullish on that company, regardless of how long we're in this COVID thing for. Or the McDonald's of the world. I mean, you see it yourself. Their deals trade at 4 caps for a reason. They don't close. They offer value to their consumers. Or in the soft goods category, the TJXs of the world. Yes, they're taking a hiccup in the road right now, but fundamentally, there's nothing wrong with that business model, because they offer up an adrenaline rush to their customers that come in, see a piece of merchandise that they can know, that like that Ralph Lauren shirt that you're wearing. If that horse was yellow instead of white, you could buy it at TJ Maxx because it was printed wrong. There's no guarantees that you could get it certainly anywhere else in that shopping center, let alone another TJ Maxx 5 miles away. So I think that those models coming out of this will be good. But to answer that latter point of your question, the mid guys who are mid-level priced, mid-level customer service, don't offer anything dynamic that you couldn't get online or that you couldn't get with better service or for a better price somewhere else, they're in trouble. And I'm not sure they're going to make it out on the other side of this, but they're going to say COVID was the problem. That's, to me, that's fake news. The retailers that I think thrive. The retailers that I think thrive, look, I think right now is an opportunity, just like it's an opportunity for me to buy deals and for you to pick up new clients. I think it's an opportunity for retailers too to send the right message, right? Shake Shack, people have, if they look into it, they may feel a little bit differently further, but the grand message was Shake Shack gave back $10 million or 10, I don't know what the agreement was, $10 million, right. Whatever it was a big amount. And Starbucks is paying their employees full time. That is going to make the consumer want to support those types of retailers. So if the retailers can say and get out the message that they're doing what they view as the right thing culturally, which I would argue is the right thing by anyone's standards, then they're going to come out of this way ahead. And then the other general thing I would say about it is I think drive-through opportunities, they were really, really hot before. I don't know how they get hotter, but they will. I think they're going to become like gold or like white hot.
Right.
I think the guys who've kind of been straddling, like, do we need a drive-through? Do we not? Some franchisees or some locations don't have them. I think they're going to get even more selective with their real estate and require drive-throughs, and it's going to make those rents explode in some ways, and it's going to bring on some small and anchored strip vacancy, at least in the space that I play in.
Yeah. Well, I know you early on when a few minutes ago you touched on the fact that how busy you are right now, and that you're that you feel like you've never been busier. What are you still making offers on deals, or are you preparing?
I've made, so like this thing started 4 or 5 weeks ago.
Mm-hmm.
4 or 5 weeks ago, I was like out there. It was business as usual, basically hunting like crazy, not finding anything, being told to pound sand. 3 weeks ago, maybe we'll consider it on certain deals. Like we'll come down the line. 2 weeks ago, things started to pick up. The last week and a half, there's been opportunities where my eyebrows raising to a point where I'm like, there's something wrong with this deal, but I haven't found it yet. And I've asked a lot of questions. And there's some serious opportunities. I mean, for example, I'm seeing a single tenant player that those deals trade 90 days ago. They traded between 6.25 and 6.75 anywhere across the country. That goes down a little bit in California. It's a little bit higher. And if it's a super tertiary market, I'm seeing deals with that particular tenant being offered closer to an 8 and finding out that I can buy it at like a 9 with 6 or 7 years left on the lease. Yeah. I can fundamentally sign off on the idea that they're going to make it through this thing. That's a buy, right? Like that's a buy. So, and then the other category that I'm super bullish on right now is multi-tenant income producing strips that are unanchored. Yeah. In a market, perfect example, like a North Augusta, where, there's not a lot of attention being paid there in general, but the fundamentals of the real estate are still good. And so guys like you would have sold it at a 6.5 cap at 100% lease 90 days ago. If you're telling me I can buy it at a 7.5 right now with 25% of the NOI gone, like I'm a player for that because I'm willing and able to bet that I can lease up that vacancy at some point.
Yeah. Yeah. I know, I've heard over the past, over the past 12, 18 months, several groups that have traditionally been, grocery anchored buyers. And these are private groups, but mostly, but they've been grocery anchored buyers have shifted their thinking more to like what you're talking about, kind of that unanchored strip center where.
Tell them it's a bad idea.
Yeah. But no, I mean, like what you think, like you like the fact that not so much of your income is tied to one tenant. Like a grocery, but now like with how great grocery stores are doing, and I think a lot of people are thinking that this is proving that grocery is just further proving that grocery anchored centers are the most desired asset class. Like, how do you think that gets sorted out with your grocery versus unanchored?
I think the long-term patient holders like the Phillips Edisons of the world who have a long-term vision for the asset. I think the real winners on these deals are the leasing agents that work there, right? Because if I'm a leasing guy at Phillips Edison and I get a couple of small shop bays and a Publix anchored center back, and next year when I'm out there looking for new prospects, once the tenants actually do fall out, I've got some vacancy back, and I say, hey, I leased a Publix anchored shopping center. Their sales were up 8% last year. They're doing $35 million in sales. Hey, small shop retailer, like great clips. Do you want to lease space here? And they're going to be like, Like, yeah. And that's how those guys make a living. And look, Pico owns, for example, 300 assets, but some the Wine Gardens and some of the other grocery REITs or large private guys like the Big D's of the world, they're going to have opportunities to see some real either credit uptick or NOI uptick potentially in certain markets. And then there's going to be other markets where you got to take what you can give, and there's going to be major offset from the NOI that they were collecting before, and they're going to see some rent decreases. So I think that all balances it out okay. I kind of operate under a different mantra in the sense that certain operators are super bullish on grocery. I am too. It's just not what I buy. I'm more focused on – I'm always a big believer that high-impact out parcels with extreme visibility can get leased by someone. Yeah. I mean, we're seeing it now. I mean, I know you guys have listed a few properties like this. I mean, the cable guys want to be on out parcels. Right. I just think there's always going to be a tenant for that stuff, just like there's always going to be stabilization associated with a grocery store.
Yeah, for sure. Good deal. Well, let me ask you this: what would be your recommendation to a company like us, like Palomar Group, or others in the in the industry right now to what do you think we could be focused on to help us help groups like yourself become successful as we come through this?
So there's two components, right? Like you guys are obviously hustlers that are willing and able and want to grow your business. To me, there's two components. You got to market and you got to sell, and there is a difference between the two. I think doing things like this and putting yourselves out there and being active on social media, not necessarily begging for a listing per se, but creating value to the masses and saying, hey, here's a report on the tenants that are paying rent and who isn't, or here's the latest update on Moody's on whose credit's actually improved versus the majority of tenants whose credit's more than suspect right now. Providing that type of value on a macro basis, which I'll call marketing. And on the selling side, like, you guys can't shut down your prospecting, and you shouldn't.
Yeah.
That said, and I'm getting a few prudent investment sales brokers have been calling me and said, are you still buying? Not, hey, I have this particular listing that you need to buy. When it's like, hang on, just make sure I'm still buying first, which I appreciate that. And then a lot of them have asked a great question of, how has your buying strategy changed through this? Just like I talked about the anchor strips before. And I think, I know that's something that you guys are doing. It's, you guys don't need any advice from a schmuck like me, but that's what I recommend for the people out there that are contemplating what's the best way to keep things going. I would not recommend just shutting down and watching Netflix for 90 days because you're
No, we've taken advice from far bigger schmucks than you, so we'll gladly take it. And well, speaking of that, on a previous episode of Palomar Perspective, your former colleague David Wik was on there, and he was asked. Ryan McCardle, my partner, was interviewing him, and he was asked. Ryan asked him who he thought was the kind of did some like senior superlatives, and asked David who is the most likely to succeed in our industry, and he called out you for that honor. So I know you and David have a good relationship. So what do you think? What do you think about that?
I think David should expand his network. He should get to know some more people. He can do better than that. No, it was extremely humbling that he even thought of me. I obviously think the world of him and what he's been able to accomplish, both individually. Well, I guess I'll put it this way: Pico's growth, he's a big part of, and the success of the company, he's played a major role in. So for someone like that to say or think of me in that light was extremely flattering, and it just adds additional pressure for me to perform, which I'm willing. I don't think is possible because I put a ton on myself. So let's just keep going. That's the way I look at it.
Nice. Well, before we finish up, tell me a little bit about tell us a little bit about the freshman forum that you're doing, and then also the podcast that you're.
Yeah, sure. So freshman forum is something that Beth Azor asked me to be a part of. It's her thing. I'm more of a co-host as I play with the pen. Sorry. Every Friday at 4 p.m. Eastern, you can register for those of you who are just getting into the business, or anybody who's maybe lost or confused or has been furloughed or thinks they might be furloughed or whatever it may be. We're just kind of getting on and shooting the breeze and collaborating on ideas of things that people could and should be doing. And we've had some great people chime in, and some great things have come of it. And we're really enjoying that. So that's every Friday at 4:00 on a Zoom call through the Azor Academy website is where you can register for that. And then not a lot of people know yet, but I'll be coming out with a podcast here pretty soon, something I've been working on for the earlier part of this year. The idea was to have the whole season come out at once, but I've gone ahead and expedited that with the marketing team that's working with me on it. We're just going to release a half a season and put it all out there in the next couple of weeks. I'm really excited for that. So be on the lookout for that. And if you want to hear people's stories about sort of how they went from being the Joe Schmo, like I still am, to becoming the CEO of some really cool brands, concepts, companies, it's going to be fun, and I'm hopeful to impact at least one person's life on it.
Nice. Well, cool. That sounds great. Well, man, look, Aaron, really appreciate you taking the time to jump on the Zoom conference with me today. And
yeah, of course. I mean, you guys have. I'm Palomar's biggest cheerleader. I'm very happy and proud to know you guys and see what you guys have been able to accomplish. And I think you're going to be able to weed out some of your competition from this thing and be able to grow and move forward as we talked about earlier. So congrats to you guys as well.
Thank you. I appreciate that. We think same of you. It's been great to watch your career progression through the years, and looking forward to watching you continuing to grow and hopefully helping you do that.
Thanks, man. We appreciate that. Of course.
Good deal, man. Well, hey, have a great rest of your day, and stay safe and stay sane while we're quarantining.
Amen. You too, man. Talk soon.
You go.
See ya.